Hello everybody, Alex here. Welcome to my finance and accounting education channel. Due to some personal reasons I have been away for a while, but I hope now I'm back for good. Today we are going to talk about a topic which might sound surprising, or it's an industry. We are talking again about an industry and specifically about a company. Maybe for some of you it's not considered to be an investable industry due to specific reasons which we will see soon, but things have developed in a certain way in the past let's say months that have revealed us that we still need this industry very much. And before we jump right in and reveal the secret about which industry we are talking and which company specifically today, although many other companies from the industry will come in the following months on this channel, I will present more companies from this industry. Before we do that, I'm going to ask you to subscribe to my channel, to hit the bell notification button, and you will never miss an update on my site. Will start doing them, and I hope to do so from now on quite regularly on Tuesdays, Thursdays and Sundays. That being said, let's go right in. So in a surprising turn of events, we are going to talk about the oil and gas industry. It's no longer in fashion to invest in this industry. It's considered an enemy of the climate. It's bringing the climate change, the intensive use of fossil fuels. It's considered not to be very fancy, also not to be, let's say, sustainable or a very good investment on long term. Per my evaluation, we can stick with our investments in the oil. If you have already investments in the oil and the gas industry, or if you plan to do them in a short time, we can stick to them for the next 10 to 15 years maybe, and there will be no surprises here. I'm going to start with presenting you some arguments. The first one is okay, it's an article from Insider, so businessinsider.com. But it was probably in the press. It's interesting that I've seen most of the main media didn't publish anything on this topic, although they publish everything that Elon Musk is saying. And Elon Musk said at the beginning of March 2022, extraordinary times demand extraordinary measures. Elon Musk says the US needs to increase oil and gas output. He also said that this will hurt his company, which is not really true, because he said he already has a problem with the production due to the semiconductors, and he has enough demand for his cars. And the idea is that if Elon Musk is thinking that we need more oil and gas, while he's also offering an alternative to the cars which are using fossil fuel, there is a call to realism. There are not enough electrical vehicles, and probably for the foreseeable future there will not be that many anyway in the total number of cars which are on the streets, due to several reasons which I have previously presented as well, mainly being the price of the cars and so on and so forth. That it takes time to just replace the entire fleet of cars which are on our streets from fossil fuel to electrical cars. So no matter how good we want to be, we want to save the planet, this will take some time, and 10 to 15 years is, from my point of view, a reasonable horizon in which we can do that. I think that the only one which is completely has lost the link with the reality is Cathie Wood. She was saying a few months ago also that the real price of the oil will be $10 or something like that, while the prices were growing and growing and growing, and they briefly reached I think $130, because she cannot grasp the reality of the fact that there are not enough electrical vehicles and we cannot produce them that fast, and they won't replace the other ones that fast. And after this piece of news, there was another one. Berkshire Hathaway reveals 5 billion stake in the oil giant Occidental Petroleum. Also at the beginning of the month, somehow they came together, all this news. which proves that even the old Warren Buffett, Jamie Munger, they still see this sector as a viable investment. Let's just say that it's not realistic to say that we can break up with the oil and gas as fast as possible. I know the ESG concerns, we should not finance oil and gas because it's hurting the planet, but we need to remain realistic. I don't have an article, but also a deal was struck a few days ago between the European Union and the United States to try to somehow replace the gas that the Russians was delivering to Europe, and to be replaced with the gas that Europe will somehow try to get from the United States. So you see again gas. It was no deal struck to build more atomic plants or to build more hydro plants or to build more solar panels or to build more windmills and so on and so forth. So it's still about the old gas and oil. That being said, the company we are going to talk about today is not from Europe, is not from the United States. You might have heard about it. It's a company called Aramco. It's a Saudi company, is the main oil production, and yeah, from the we have 2021 press release and the full financial report. They just presented the full results of 2021. Basically, if we are going to the 2021 reports, it has one from 88 pages. We will see later there is value in reading these statements, as also Warren Buffett is doing, and Elon Musk said once that he thinks that the job of Warren Buffett is very boring, but he's doing it very well. There is a lot of value in reading these pages, and we will see why exactly. And there is also let's say a shorter version of this report, so with the highlights, which I recommend you read if you are interested about the sector and about this company. So if you are interested in this company, usually when we talk about the results, we talk about the quarterly results which are unaudited, but this time being let's say the year results, they are also audited by PricewaterhouseCoopers. The most important paragraph about this so is this one, our opinion. So in our opinion, the consolidated financial statements are presented fairly in all material respects. The consolidated financial position of Saudi Arabian Oil Company, the company and its subsidiaries, together the group, as of December 31st, 2021, and its consolidated financial performance and its consolidated cash flows for the year then ended in accordance with the international financial reporting standards. So they need to say that they are presented fairly in accordance to which financial standards. So international, we are talking about IFRS, that are endorsed in the Kingdom of Saudi Arabia, and other standards and announcements issued by the Saudi Organization of Chartered and Professional Accountants, SOCPA. Now, there are, when we are talking about audit opinions, basically we have these types of opinions. What we have just read, even if you are not a specialist in audit, I'm also not a specialist in audit, I studied it at some point and I think I still know how to read that, but that's an unmodified opinion. I wish that you never invest in a company that is getting a modified opinion, which can be qualified, adverse, or disclaimer of opinion. So judging by the color code, a qualified opinion is not very extremely bad, but also not extremely good. Adverse and the disclaimer of opinion, here they cannot offer any opinion with the disclaimer. Adverse is that the financial statement don't match in any way the standards. And what we have here for the Saudi Aramco company is an unmodified opinion, which is very good. Now, if we are going back, let's just take a look at the financial performance, which is surprisingly good, let's just say. So we have if we go directly to the net income, we have more than doubling from 49, this is in million dollars, so we are talking about 49 billions. So we have a doubling from 49 billions to 109 billions only. So in the net income from 2020 to 2021 in USD, this is in the local currency of the country, which is basically in line with what happened with the oil and gas prices in the last period. Of course, we can look at other, let's say, key performance indicators. What was interesting for me was also to see that the company has not that much debt. So it has only a 14.2 gearing, which is, let's just say, for an oil company, and it's very good. The cash flow looks very good. So from my point of view, it's from financial perspective, it's a very healthy company. And I was telling you that let's just say there is value in reading all these 88 pages. Although I got there a little bit faster, because I knew what to look for. Where is it? So I know I should have opened a separate page with this information. So on the page 75 from 88, we have information about dividends. Those are dividends declared in December 2019, paid in January 2020. Yeah, as you have seen, the net income has more than doubled. What is very interesting and should be read here in this paragraph is that the company's on March 18th, 2022, the board of directors recommended to the extraordinary general assembly to increase the company's share capital by SAR 15,000 and increase the number of the company's issued ordinary shares by 20 billion. Make no mistakes, this is not diluting the shareholders' value, because they are not issuing new shares to raise capital from the market. Without par value, such increase will be through capitalization from the company's retained earnings. So they are using already their retained earnings. Each shareholder will be granted one bonus share for every 10 shares owned. The increase of the share capital and the number of ordinary shares is subject to obtaining necessary approvals from competent authorities of the Extraordinary General Assembly, which will be announced later as per required regulatory period. Okay, they need to get some approvals, but one per each 10 owned is an immediate 10% return. Just like that, if you will own these shares, when they do this move, you will get a 10% return, which I think is good. And on, let's say, the next years, I expect only good things to happen. I have read several other pieces of information about this company. They are really interested in going also in this direction of, let's say, sustainable energy. They are interested in capturing carbon. So it's what I call more than a classical oil and gas company, but more of energy company, which means that they understand the importance of climate neutrality on a longer term, and they will do it anyway. So it's a very interesting company from my point of view, and also investable. Now coming to the, let's say, the potentially less positive aspects, although it's not that bad as by other oil companies, is that because of the recent developments, the share prices are at the 52 weeks, close to the 52 weeks high. In case of Saudi Arabian Oil Co, so Aramco, that's not quite true, because we had a share price between 34 and 40 and 36, and it's now 41.85, so it has a fair 4.15 SAR to reach the 52 weeks high. And also the P/E ratio for an oil company is a little bit higher than expected, or for a little bit higher than what the other companies have. If we are looking at the evolution, so 1 day, 5 days, 1 month, 6 months, you see that the share price was in the past 5 months quite flat, then it spiked, it got down again, spiked again, now it's on a downward trend. Year to date, 1 year, 5 years also relevant. So I do not see a negative trend. And also if you are going on the max, so apparently it was listed from the first time. A large shareholder is the royal family of Saudi Arabia. It was listed in December 2019 on the stock exchange. And another thing which may be interesting, and we need to read a little bit about it, is the political context. Per my information, it's not something negative. So I told you several times that I don't like the Chinese stocks because of the political context. Russian stocks I never considered, and we see right now why. You shouldn't have either the Chinese stocks, also because of the political context. I would rate the political risk of owning shares in a company from Saudi Arabia, let's just say lower than the risk of owning shares in China. However, there is a little bit of risk, let's just be honest. The democracy levels are probably not at the level of Europe and mostly Central and Western Europe, so and the United States. However, I do not believe that they are significant enough to get you into trouble should you ever decide to invest in such company. Just remember that I'm not a financial analyst. This is not advice for you to invest in this company. Your decisions are yours and yours alone, and I take no responsibility whether you decide to invest in this company or others divest from the companies and so on and so forth. That was it for today. You can support me by liking this video, commenting in the comment section if you have something to add, sharing this video with somebody that you think might be interested. But most importantly, do not forget to subscribe to my channel, to hit the bell notification, and you will never miss an update. I do them quite regularly these days. On Tuesdays, Thursdays and Sundays you should expect new and hopefully interesting videos from my side. Also below this video you have links. You can subscribe to or create a eToro account and trade. There's attention, those are not shares, are CFDs, which are, let's put it simply, okay, they are derivatives and they simulate the price of shares in the market, but you can do that there without a commission or a fee, which of course is a saving any day, no matter how often you are trading. And also below that link you have a link to an Amazon wish list, which can help me improve the quality of my videos and will be also beneficial for you because you will get better videos from me. But from financial perspective, that is the most inconvenient for you. The easiest way through which you can support me is, of course, subscribe to my channel and continuing to watch my videos, because it doesn't cost you anything and it's encouraging me to continue doing it. And yeah, I hope you enjoyed this video and I look forward to presenting to you next time. Goodbye.